Hey everyone, and welcome back. Now today I wanted to do a bit of an update on Ethereum, just because lately we have seen, a lot of FUD, a lot of just general uncertainty around the just Ethereum ecosystem overall. And so I figured it would be worthwhile to go in and just do a bit of an update to kind of see where things stand with the Ethereum ecosystem, and if we reasonably think that it could make a comeback to previous all-time highs, and then ultimately hopefully be smashing through those into new all-time highs this upcoming cycle. So let's go ahead and dive right in and get a sense of if we think that is possible. So looking at the Ethereum chart, what we can see is a couple of things. I've gone to the daily candles just so we can kind of zoom out and get a big picture of what we're seeing with Ethereum. So we can see a couple of things going on. First off, we can see this like 2130 range remains to be a pretty strong level of support. Zooming out, we can see, it's been a pretty strong level of support here. And then also when we were in this ascending wedge, also a pretty decent level of resistance as well. So this kind of remains to be a pretty decent point of support. So far, it's bounced off twice with a pretty decent velocity at both times. Obviously this was the yen carry trade unwind that we obviously saw a massive wick down, and then it kind of went back up. Same thing here. We saw kind of wick down and then carry right back up into a pretty strong bounce. So, and then we obviously have pulled back a little bit, but again bounced up off of this now upper level of support too. So what remains to be seen, at least in the short term, is we can see here there's a bit of like a liquidity zone. We kind of almost touched up into it. Well, we did a little bit with this run, and then we bounced back down. If we were to hold this level of support, I'd imagine another run up into this like liquidity zone, anywhere between kind of like the 2380 and like the 2420 range. As we can see, there's been wicks kind of in every point through here. So I do think this remains to be a pretty important zone. If we can break above this, obviously, 2550 seems to be the next point that we would want to hit. And then I do have some levels that seem to be pretty major overall, coming all the way up to, about 3,300. And then from there, we're probably seeing a level of, 3,800 to 4,000, which is, essentially the recent highs that we've seen. So, this is essentially kind of what we'd have to come back through in order to hit new all-time highs. And so it doesn't look super great. Obviously, we've come back a decent chunk. Basically, we've given back all of the gains that have been made in 2024, which isn't the end of the world, but it does seem to hold. It does seem to be that this support is still holding strong, which is good. As you can see, I have been doing a lot of my charting just primarily in Margex now, just because I have been doing some trading within Margex. Obviously, this is leverage trading, so it is a little bit risky. Definitely don't do it if you're uncomfortable with trading like this. But ultimately, with some of these movements, we can get some pretty good gains. I haven't been trading too much recently just because I haven't seen much structure that I feel comfortable trading on, but I have been fairly successful with it overall. If you are interested in trading and want to get involved, please check the link in my description. You do get up to $10,000 in deposit bonuses when you sign up. Also, there's no KYC, there's no VPN, none of that needed with Margex as well. They are also doing, for the month of September, a $500,000 Caspa airdrop. So if you are interested in potentially earning some free Caspa, go ahead and check that out, and you can just get signed up and get started trading. As we can see on the 1-day and the 7-day chart, things are pretty spread, which means there's a general level of like uncertainty of where the next movement is going to go, right? Which, if we look at the chart, that does seem to make a decent bit of sense, given that we are kind of in the middle range between the bottom level of support and then the upper level of kind of that liquidity zone. So this seems to kind of make sense. If we look at the 30-day, there is obviously, a bias towards liquidating shorts, which would mean a move to the upside, which, this is kind of consensus throughout the market, I think. But again, just given the current headwinds that are currently facing us within the crypto and macro market overall, I'm not sure if we'll be seeing any sort of move, particularly towards, the maximum upside any point soon. I think this is, even though there is definitely like a pull toward the upside, I don't know if we'll see that happening in the short term. So one thing I wanted to move on to is, looking at the Ultrasound Money website. And as we can see, Ethereum, especially, so we saw the merge, or not the merge, the Denkun upgrade happen about here. Since then, we have seen the Ethereum inflation pretty consistent from there. We still are technically net deflationary since the merge happened back in 2022. But I mean, obviously, looking at this trend line, I think it's pretty clear to see that we will be going back into an inflationary environment for Ethereum over the next, I don't know, probably 4 months. Maybe we get back to, net inflationary. So this is something that I think people are concerned a little bit about, but I personally don't see it as much of a concern. We have to remember, even right now, since the merge, the total net deflationary is 0.08%, right? So even with the level of inflation, even if we were to go to, let's do like 30 days, it's 0.7%. So, I mean, a decent chunk, I would say, for inflation, definitely. But I think as we start to see some more activity on the network, then this is something that probably will change. And what we're seeing is a lot of the activity that's coming into the Ethereum ecosystem is happening on layer 2s. So if we look at layer 2s, obviously transaction counts are up majorly. You can see we pulled back a little bit to where we're only at about 12 million a day, where our recent highs were about 17 million. Yeah, about 17 million a day. But we've seen this before. We've seen some spikes and then some pullbacks. What's important to note is that overall we have been seeing higher highs and higher lows. Hopefully this continues. I mean, obviously if this continues to drop off, maybe we don't see that, but I do think it's still possible. Another thing that's important to note too is the stablecoin market cap does continue to climb fairly steadily on the layer 2s, which is really good. So also looking at the layer 2 weekly engagement with active addresses, and I have this marked per chain, we can see a very consistent uptrend very clearly. Obviously Base is the one that's taking almost all, I think it's over half, 58% of the volume. I think this will honestly probably continue to go this way, just because Base has found a lot of success. Most of the retail participation, a lot of like the meme coin engagement, a lot of that type of stuff is happening on Base. If it is happening on the Ethereum ecosystem, I guess I should say, if it's not happening on the layer 1, it's happening on Base. And so that's very important to note. I think it's widely kind of considered that Base is expected to be one of the bigger winners in this bull run. Obviously, not financial advice. Nobody knows. I have no idea. Nobody has any idea. But I think there's just kind of a general sentiment that when retail comes back, Base is going to be one of the very, very big winners, just because of Coinbase and the retail on-ramp that they do have kind of already built in. So, to see the growth on Base isn't necessarily too surprising. And frankly, I just expect it to continue to grow. As we've looked at charts previously, but ARBITRUM is the one that still does control the majority of the TVL, at least at this point. I think we can actually find it here. Yeah, so we can see that ARBITRUM still does control probably the majority of the TVL. Both Base and OPTIMISM are at about half of what ARBITRUM is, but they are continuing to grow. We can see the year-over-year growth. Mantle, Linnea, Base are obviously kind of the big winners. Mantle and Linnea obviously not even close to Base, so I would say Base just from a sheer scale of things is definitely the biggest winner for sure. So the next thing I want to talk about is this article that is essentially discussing some of the misconceptions that the community has been defending about Vitalik's layer 2 stance that he put out in his roadmap in 2020. We can see it was put out on October 2nd of 2020. One of the main there are three main claims that are kind of being debunked here, but I wanted to focus on the first one particularly, and that is that layer 2s aren't Ethereum because they compete with one another. Since ARBITRUM is not Base, they cannot both be Ethereum. Wrong. To quote Vitalik, it's okay, actually good, for Ethereum to consist of several islands that are unique yet still part of a greater Ethereum. Now, this is the point where, yes, I would agree that is the intended vision. However, I do think, in my personal opinion, that this kind of prevents a roadblock for what Ethereum could be, and will always prevent a roadblock for what Ethereum could be until it's fixed. This whole islands thing is definitely a problem, right? I think it should be more of states, in the sense that yes, maybe they are technically separate, but from a geographic perspective, if you didn't overlay a political map onto the world, you would have no idea where Spain starts and Portugal ends generally, right? You just wouldn't be able to tell, and the only way you can tell is because of these geopolitical boundaries that are drawn, right? I think Ethereum should look that way, in the sense that you can move between them freely, where if they're islands, you obviously cannot move between them freely. It actually takes quite a bit of work to get between them. And so this, to me, actually remains to be one of the larger problems with Ethereum, is I think as more layer 2s are developed, it just continues to fragment Ethereum's liquidity more and more and more, which does ultimately, in my opinion, become a bit of an issue. So this is something that, I'm interested to see how it gets addressed. Obviously, Polygon's ag layer is one. There are certain developments with ICP that are potentially allowing plugins cross-chain. I know Chainlink, I know Polkadot is another. Like basically the interoperability is like the big question that everybody's trying to solve. So this isn't like some, you know, some revolutionary notion that I have. It's just something that I felt like was worth really highlighting here, because that kind of the benefit, or at least as these guys are claiming the benefit of layer 2s, is also, in my opinion, one of the major drawbacks of the Ethereum ecosystem. So that's just something to consider, and something that I do kind of think the future price action of Ethereum does kind of depend on, is how can they fix the liquidity problem. So the next and final thing that I wanted to bring up was just talking about the Ethereum ETF. So finally, we've started to see a net inflow into the Ethereum ETFs of 11.4 million, which obviously isn't huge, especially compared to some of the numbers that we've seen with Bitcoin. But we are starting to see some inflows back into the ETFs, which is good. This does show at least potentially some more institutional demand for Ethereum, which could signal that, potentially we have seen some of the local bottoms. Nobody knows. I mean, usually these guys are considered smart money, and usually they're right more times than wrong. However, I would not consider this a very meaningful amount of money. So it is very possible that we're wrong and we still see lower prices from here. So anyway, I just want to go over that with you guys today. Hopefully it makes sense, kind of, how all this kind of fits together. I do think overall, fundamentally, Ethereum does still look pretty bullish. I am pretty optimistic that they can at least make some sort of comeback. Whether we see a $20,000, $30,000, $40,000 Ethereum, I think that is highly dependent on the developments and the innovations that come out of the Ethereum ecosystem. I do think Ethereum could just kind of exist and probably break all-time highs. But in order to see some of these ridiculous valuations, and potentially even like the flippening and all this type of stuff, I think that's going to be a little bit difficult, particularly without the liquidity being unified. Because the more layer 2s come through, the more liquidity gets fractured, and in my opinion, that's a problem. So anyway, if you found the information in this video useful, please do like and subscribe. It really does help me out. I am still on my road to 1,000 subscribers. So if you want to help me achieve that goal, that would be really appreciated. Also, if you have any questions, comments, concerns, whatever, you just want to interact with me, please drop a comment below. I do read all of my comments and I do respond to them all as well. So you'll be hearing from me there as well. Also, if you do want to get into leverage trading, again, it is incredibly risky, but if you are looking to do that anyway, please check out my Margex link below. They do have up to $10,000 of deposit bonuses, as well as that $500,000 Caspa airdrop that's still going on. So anyway, thank you for tuning in, and we'll see you in the next video.